Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting on the weekly time frame with the most bullish scenario, where we're looking for a triple 1-2 and want to see a very big wave 3 towards the upside, where we also want to see significant volume coming in. The invalidation for this scenario is price moving to the downside, touching 38.5k. If the low is in of your most recent wave 2 on top of the 382, which is a target for a wave 2, then we want to count an impulsive structure on the lower time frames. Here on the 4-hour chart, you can see a wave 1, 2, 3, looking for 4 to finish, and then a wave 5 towards the upside. The invalidation for this scenario is price moving to the downside, touching the high of wave 1, as in an impulse, wave 1 and wave 4 are not allowed to overlap. The invalidation is 65.5k. The target for wave 5 here is between the 1.236 and the 0.618, 73.3k, 75.8k. However, because wave 1 and wave 3 are quite similar in price, it does give the opportunity for wave 5 to be the extended structure, meaning it is the longest, strongest and most impulsive wave out of wave 1, 3 and wave 5. In that case, your target is going to be the 1.618 over here at 91.3k. On the lower time frames, currently the bullish scenario here would be a triangle, wave A, B, C, looking for D, then a wave E to the downside and continuation to the upside. The most common target for your wave D is the 618 to the 786, which is what we have reached right now, 69k to 69.8k. In this target area, we have some additional resistance, which is the blue box here, between 69.5k and 69.7k. If price can pass this resistance, it will increase the probabilities to move to the invalidation, sitting at 70.6k. An uncommon target for wave D is the 05 and the 886. The 05 at 68.6k has been passed and the 886 sits at 70.1k. After wave D, we then want to see a zigzag structure to the downside in a wave E and continuation to the upside without wave E touching the low of wave C at 66.6k. The second bullish scenario on the weekly time frame is a double 1-2 and then wave 3 in green is already finished, looking for 4 and then a wave 5 to the upside to finish the yellow wave 3, after which we expect another 4 and another push to the upside in a wave 5. Common target area for your wave 4 is between the 382 and the 05, taken from the low to the high of wave 3, giving you a target between 57.5 and 53.3k. This low here touched the 382, so is a potential candidate for the low of wave 4, but if price continues ranging in this scenario, that is no problem. As long as the invalidation at least is not hit, the 0.618 at 49.3k. The bearish scenario on the daily time frame is a zigzag here in a 535 ABC, where wave A is a leading diagonal, 1, 2, 3, 4, 5. Wave B a zigzag to the upside, a 3-wave corrective structure touching the 886, which is a common target for wave B. And then you want to see a 5-wave C towards the downside. Common target for your wave C is between the 1 and the 1.236 trend-based Fib extension, taken from the start to the end of A to the end of wave B, giving you a target between 54.6k and 50.5k. Preferably wave C also ends after the 0.382 Fib time, taken from the start to the end of A to the end of B, sitting on the 8th of June. On the lower time frames, that means that we at least want to move below this range and take this low at 66.3k. As long as we do not at least take out this low here, we can't really give the highest probabilities to bearish scenarios. Nonetheless, the bearish scenario here is the bearish scenario here is a leading diagonal 1, 2, 3, 4, 5 and then a bigger wave 1, looking for a 2 and then a bigger wave 3 to the downside. Common target for your wave 3 is between the 786, 886 trend-based Fib extension from the high to the low of 1 to the high of wave 2, giving you a target between 66.1k and 65.5k, preferably not touching the 1-to-1 at 64.9k. The invalidation for this scenario is price moving to the upside, touching the high of 2 at 70.6k. Looking at these CVD divergences, we have a bullish CVD divergences in this range over here. Higher low in price, lower low on the CVD, and also locally we had bullish CVDs here as well as here. These already played out, and now the bullish CVDs with the most recent drop has also played out because price touched this high. You can see over here on the 1 hour time frame we have a higher low on price, lower low on yellow as well as on blue. That is a bullish CVD divergence. And also more locally we already had bullish CVD over here on yellow, also again over here on blue, higher low in price but lower low on the CVD. And then with the recent drop to the downside here, we also had bullish CVD divergences, higher low in price, lower low on yellow. All of these CVD divergences have now played out. The probabilities of the different scenarios are as follows: that on the weekly time frame the probabilities are highest for bullish scenarios compared to bearish scenarios. Before considering bearish scenarios, we will first need to lose significant levels on the higher time frame before I even like to show those type of scenarios. And on the 4 hour time frame the probabilities are higher for bullish scenarios until 66.3k, the low over here of this range, or 65.5k as a bare minimum are hit. On the number 2 spot then the bearish scenarios, which are impulsive scenarios to the downside. The closest resistance is 69.6k and then 71k. The closest support is 67.2k and 65.2k. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.